Good day, everyone. Well, today's gap down open. That was a great place to take profits on any of your short positions, and then you can wait for any weak rally attempts on the part of those stocks. We've said many times that stocks take the stairs up and the trapdoor down, especially in these environments. And the thing about there's a bifurcation between what the averages do and what a lot of these leading stocks do. Fund managers are in FOMO mode, meaning they have a fear of missing out on the uptrend. So on pullbacks, even minor ones, they'll jump in, and that creates the shallow floors. But meanwhile, traders are bailing on leading names in a heartbeat. These are names that sometimes get ahead of themselves in prices, which is why we always advocate taking profits in that situation. Or it could be names that just, they're a bit above their 10-day and they need to pull back and digest their recent gains. Obviously, big winning stocks like NVIDIA last year did that a number of times. We always say there's a quick and then there's the dead when it comes to these short, sharp sell-offs. So, often a short position will have a lifespan of 1 day or 2 days. But if you got the profits, you should be quick to take them. Right now, the market could go lower. We don't know, but we could get another rotational correction, and the money could flow into groups like the solars. There's stocks like FSLR, SPWR, SEDG, SEDG, and they've all bounced hard. You can see it on the weekly in perspective in relation to how much they've fallen over the last couple of years. But solar, the whole group, did reach a major tipping point last year when it economically outpaced fossil fuels for the first time ever. And it's the economies of scale that are driving the falling prices. The cost of solar power has fallen to 1/150th. That's 150th of its level in the 70s. And that current continues to occur. And last year, as I said, was a tipping point there. Actually, the total amount of installed solar has soared something like 115,000-fold by some media accounts. So it's a definite viable group that I think fund managers are keeping an eye on. It's been beaten down so much. I mean, the group ranking on this thing is still really low, but if you look at the group rank over the last quarter, it's a different story. These solars are starting to pick up again. So they're ones to watch. Another group that stands to benefit is the cybersecurity names. These would be names like FTNT, which is on our list. That had a nice gap higher on its prior earnings, and it's been going sideways. It almost touched the 20-day today before bouncing. You also have CUDA, C-U-D-A. That one's just been in a fairly tight consolidation. That too came down to its 50-day moving average before finding support. These days, and actually I wouldn't say these days, it's been building up to this point. It's becoming a bit too alarming and easy to do identity theft on people. I know there's a major magazine, one of the most major magazines, The Atlantic, is doing a blog on that point because a lot of people, their reputations have been ruined via the internet, via false attacks, via hack attacks, and so on. So cybersecurity is going to be huge. And Google has always put a good chunk of their profits. I was always alarmed to see how, I think it was something like 8 to 12% of their profits were always going into cybersecurity for their own good, because they felt that that is a huge risk that they want to mitigate. So at any rate, we are at another tipping point in terms of cybersecurity as well. So I think these stocks could benefit from that wave. And lastly, I wanted to mention the do-it-yourself stocks. These are the stocks like Shopify. And you can see that it doesn't really want to pull back. It has gotten support at its 10-day, and it just keeps ripping higher. And this is a cloud-based commerce platform. So it allows businesses to basically operate off of these platforms. Small businesses too. So it could also be, a lot of people are jumping onto the web and starting their own business, and a company like Shop is going to be benefiting from that trend, that wave of people that are coming online for retail purposes. Wix is another one, WIX. That too, you can see, is reluctant to pull back, and that's a company that provides. It's a cloud-based platform as well, of course, but it allows web development, so users can use that company for building out their web properties. So these are all worth keeping an eye on, these groups, and of course there's some names I didn't cover, but just in general, I think these groups stand to go higher, especially with the markets which remain in an uptrend. As far as other issues like commodity prices have pretty much flatlined. They did seem to put in a significant low last year, and now they're just kind of going sideways in a quiet way. I think with some evidence of a global economic recovery, even though it's very slow and stagnant, that should help the prices of commodities move higher as demand increases. Gil, did you want to add to that? Any kind of stocks or groups that you think are viable?
Yeah, hang on a second. I'm actually busy doing some trading here.
Okay.
Yeah. Anyways, okay, I'm done. Well, my take is, I hit this thing short yesterday, and you could see things starting to break pretty quickly. Like for example, X, you could see it breaking off the peak, so you get short. But again, is the short side going to be anything more than a scalp here? And so you never really know for sure, because a lot of these corrections or pullbacks in the general market have been rotational in nature. In other words, you'll see a group of stocks, like now we're seeing the X and the materials like Martin Marietta breaking down. We had another infrastructure stock, Argan, which is breaking down. So you see the money just come flying out of these things. Now, I did want to make a point. Splunk is a name. I actually shorted this near the open around, I think it was 63.60, and it broke to the 20-day line, and I'll cover there. And I've actually, on the bounce off the 20-day line, I'll shift to the long side on this to play the bounce and see where it goes, because they did come out with strong earnings, but there's something to keep an eye on here, is that you're in this base and you're sort of failing on the breakout. So it's not really clear to me whether this is going to turn into a sort of a weird sort of pod formation and break down. And I think the only way you're going to be coming in short here aggressively is if you see a breach of the 20-day line. But I could get a sense that there was some, being short the name this morning, I got a sense that there was some support around the 20-day line. Notice how it undercut this low right here, and now it's turning back. So I'm actually long the thing. This could just be a trade, but we'll see. Another one I'm long, and I actually was short a bunch of stocks. Mobilize, another one. I hit that one yesterday, and I actually stayed short it overnight because it looked to me like it would probably pull in. Of course, it comes down to the 10-day, and I took my profit on that one. Vidi was one I shorted yesterday in the after hours. They came out with earnings and I guess beat by 85 cents or something like that. And so I got off a short at 188 yesterday in the after hours, and then I covered it down here around 176 or whatever. But you notice how it comes right to the 50-day line. So I'm going to cover there, okay? And I don't think you can be late to the short selling party if you think that you're going to jump on things on the short side and make a bunch of money after things have come down as much as they did yesterday and today. So in particular, like the situation with X, you're kind of hoping for too much. And once you get down to the 50-day line, they're probably going to bounce it, and then I would watch the bounce, because this might be one to get short again if it rolls back through the 20-day line. But to me, a lot of this is fluid. So, and I actually like the action in these solars. I think they could be an area where you rotate into, as Dr. K was pointing out, their solar is actually cheaper. It's actually become cheaper than natural gas. Is that right? Or I saw something this morning.
Yeah, that's correct. That's right.
And so, it's kind of coming into its own. And so, you know, I like some of these names here. They're down and dirty, but in a rotational market, what I'm always looking at, if I'm making money short, okay, I don't start getting a big well, you know, getting all excited over the short side. Oh, I'm going to make a killing, because you really never know for sure in this market. It's kind of goofy. All you know is if you get a good break in the morning, and I think I've talked about this many, many times in these webinars, I find that if you get a good break in the morning, you can cover into that, and then everything's going to bounce around all day, and then you might get a shot at coming in short again later in the day if things start to fail. So, you know, I think that's definitely something to keep in mind here. So I am in a bifurcated sort of state here. Give me 1 second. I just got an alert on something. Okay. So like things I'm short right now, or well, I actually got some out on this Qualcomm. And we'll see if this breaks, but I was basically watching it on the 620. I was shorting it yesterday at around 57 and change, near the highs of the range. And you can see how it's kind of fluttering around. Maybe it's going to break to the downside. We'll see. And then the other one would be, I'm testing out this one, but I don't know if this is going to fail or not. It's holding up okay, so I may end up just blowing this out. But I shorted right at the 10-day line. But it actually looks pretty good here on the weekly chart and the daily chart. So I might be going up, you know, the wrong way on this one. So on that basis, I'm ready to cover and go long if necessary, and I'll do that in any particular situation where I get a sense that you have a strong bid. Look at, say, for example, NVIDIA. Okay, what do you see here? Now this one I thought was a short, and we've been talking about this on the weekend focus list review, I guess, that we do. And what happened here? Well, you undercut the lows of the base, and that triggers a rally. And obviously you're busting through the 50-day line on heavy volume. It looks like the end of the world, but it undercuts and it turns and rallies. And if you're watching this on a 620, and I've been working this on the short side the last few days, if you're watching it this morning and you see it undercutting, and then at the same time you look at the 620 chart and you see it cross fairly soon after the open, guess what? You're taking your profits. If you're not, you're stupid. And you're just coming in late and thinking you're going to make a bunch of money on the short side by by coming in late, and something like this is going to break apart. It doesn't work that way in this market. You know, it's not like the old days, and I've commented before that, let's say if I had come in the old days, if I had come in short the way I did this morning, okay, and I get a nice gap down, guess what I'm doing? I'm getting shorter, and the market would break apart and I'd make a bunch of money. So I could jump all over it. But these days you cannot in any way, shape, or form jump all over action once it becomes too obvious in one direction or the other. So example would be on the breakout side. You got a Weibo breaking out. That was a base breakout over the last couple of days before earnings. Now, speaking for myself, I would have just sold into that and taken my profits, because the buy points in here were down lower pretty much at the same time that Momo was also showing similar buy points. And same thing here. You know, you break out, I'd sell into that. And I think it would be irresponsible of us to be telling people that, yeah, just buy breakouts. I think in this rotational market, and we've seen it happen time and time again, the strong moves occur as the stocks are turning off the lows of the bases. And then what happens is things start to run up the right side of the base, and then they break out, they suck everybody in, and then they knock them back. So if you sell into that, you have a shot at thinking clearly, bagging a profit, having some cash in your pocket, and you can decide whether you might want to come back after the stock. So, you know, it's much easier to operate that way. And look at, for example, Tesla. You know, I was reading an IBD for the last couple of weeks that, oh, Tesla is within buying, within range of a potential breakout at such and such a buy point. But let's get real. The time to be buying this was, you could have, first of all, there's a bottom fishing pocket pivot down here. Then you had 3 pocket pivots at the 200-day line right in here. See, the market's trying to sit up here, so it's not coming apart, which is very interesting. But what I'm looking at here is, where do I want to rotate if I want to go long? I kind of like some of the action. Well, Mobileye is actually looking okay. That might be something to look at. Just real quick, remember this is real time, so I'm trying to trade at the same time. And that's got support off the 10-day. When I covered, I should have gone long, but I didn't. So no big deal. I've got Splunk long. I've got some Fortinet. And we'll see what happens with the rest of these. But I definitely watch and see how this settles in. It may need to go sideways. They had great earnings. But anyways, getting back to Tesla, the you had this is a bottom fishing pocket pivot. Now at that point, all I know is that might be good for a trade up to the 200-day line, and then you see what happens at that point. So if I bought it there, I'd sell into that. That's swing trading. Now what happens is it sits along the 200-day line for a few days, and you get one, which I think would be here, 1, 2, and 3 pocket pivots at the 200-day line, so you can go long again. And now this thing just keeps running up. And remember last week what did I point out about this? I said you got to watch this carefully because hold on a second here. I'm like Donald Trump. I'm watching Fox Business News on some afternoons, and they talk about Donald Trump and the live action presidency. So I guess we're live action here. Whatever happened? Who was that guy? He was live action. He was a turtle hunter or something like that. I forget. Anyways, give me 1 second here. Okay, my estimation here on ATVI is that I can feel that this bid is pretty strong and the stock's acting pretty well. And so what I'm doing here is I'm going to cover the short here and flip to the long side and see what happens there. My stop would actually be the flat line on the day, but we'll see what happens. But you can see in this manner, I use the information I get from shorting to sometimes go long and flip to the long side. So I don't have a bias one way or the other. What's that, Dr. K?
Yeah, I mean, Livermore in Reminiscences of a Stock Trader and his other volume, How to Trade in Stocks, both which every trader must read. He talks about not being on either side, using the bid and the ask, the support and resistance intraday when he's trying to get shares. He said the harder that it is to buy the shares, the more he wants the shares because it shows that it's in play, it's in demand. And likewise, if he can easily sell, just dump a position without moving the price, he realizes that he might have made a mistake in selling that and often would turn right around and buy it back. So he's always pulsing markets in real time, and that's the best way to get to develop the finesse on refining one's entry and exit points.
Yeah, definitely. And I think I was reading his book that he wrote, I think in the 40s. You can actually get it online as a PDF. I think someone copied it and put it up as a PDF. I think it's How I Trade in Stocks, the original edition, and he talks about all that. And that's something, I remember actually reading that back in 2013 and when I had my big revelation about this market, and I decided that I had to learn or understand better how to use the market information to my advantage rather than trying to take a position and fighting it. And I know a lot of people will do that. So, hey, Dr. K, you might want to put a report out telling people to watch out on the Splunk because it may turn into a long. I'm long this thing, okay? And I was shorted earlier, and it hit the 20-day moving average. I covered there to see if it would break, and it didn't. So now this thing looks like it may want to turn higher, and I think they did come out with good earnings. So I don't know. I don't know if this is a short. Anyways, I want to get to some quick questions before I move on. IPHI, someone's asking about. I don't know. We talked about this stock so many times. I don't really care much for it. It's an optical-related semiconductor. So in my mind, this is kind of it's just very choppy, So what do? You buy it. I guess if you want to buy it, you buy it on pullbacks, not on strength, and then you have a tight stop, say here at the 50-day line. So, and BABA, what's BABA doing? BABA's hanging at the 20-day line, so it's not really coming apart, which I guess is constructive. And on that basis, I think it probably becomes viable along the 20-day line. I'm wondering, look at something like a Weibo. That thing is like a late-stage failed base, okay? So you can see the failure here on the weekly chart. That's not too hard to see. I'll make it bigger for you. You guys all see that? And now what you do is you break the 20-day line. Now that's your, and you fall back into the base. You've broken below the midpoint of the W pattern, which would be right here. And now you're rallying into the 20-day line. So that becomes shortable on the rally up into the 20-day moving average, as far as I'm concerned. And you could hit it there. Now you'd be making a little bit of money. If you, I guess, can you borrow it, you guys? Is it easy to borrow? I don't know. Somebody looks like they're having trouble with their audio. Somebody's asking, I know that the day isn't over, but any change in the market direction model or the VIX model? Well, I mean, common sense would tell you that if there was a change in the models that you would get an email report telling you so. So we're not going to secretly change the model signal and not tell anybody. So if it does, you'll get an email. So I won't really worry about it.
Yeah, and we, you know, I mean, once in a great while, I'll get a question of how close is it to a change in signal. It's impossible to say. In my experience,
6 minutes.
You know, yeah, if you try to game the model, especially the VIX model, it doesn't work to our favor. We want to maximize its profit, and I learned that the hard way last year. You know, I wrote that 25 years of experience can work against you, because the model would make a switch in signal, and I wouldn't take it because everything I know about the market said don't take that signal. I don't know why the model wants to change here, and yet it would be, on balance, it wasn't always right, but on balance, it made a big difference to profits to take every model signal. So that's the best way to answer that.
Good answer. Anyways, there's a bigger shot of but you can see how it's failing. You know what's interesting is that if you go look at Baidu, and I think you can go back and look at C-Trip, and you can go back and look at other Chinese names that have had big moves after breaking out of these bases. So, like, if you look at Weibo, it came out of this structure, and then you see this big structure, and it broke out back last year in the springtime, and it had a big move, and it forms a base up here, and it fails. And if you go back and look at Baidu came out of a big range back, I think, in 2007 or something, ran up, and then it formed a base, and then it failed. Let's see if I can pull this up, show you guys what I'm talking about. See, the Splunk is I would rescind that short sale report, Dr. I think this thing could be a long.
Yeah, I just sent a note out.
Sorry, that's just what I'm getting the sense of here, even though I scalped it pretty nicely. The Qualcomm looks questionable to me. I think Intel is probably moving more into their space. So, but in any case, let me go see if I can go back here, and we're going to go back to, if you guys remember when Baidu came public. Anybody remember what year Baidu came public? Uh-oh, did I go too far? Yes, I did. 2005. I remember it was July or August of 2005. I was in Hawaii, and that's when Bill O'Neill called me up and wanted to know about this new IPO. I guess it was on this this week here. And he wakes me up at like 2 o'clock in the morning because it's 3 hours earlier in Hawaii. But in any case, look at how Baidu came out of this big structure. It came public, and then you have to have this big structure, and it breaks out through here. See that? So you break out in here, you pull back once, and then you go higher. And then you form this little weird cup with handle type base. And then what happens? It goes into, it corrects, and it actually tries to form a cup with handle, and it tops, and that's it. So if you look at something like Weibo today, it comes out of this, you can see how it comes out of this long structure here, and then you break out, you run up, and you form a base, and I don't know, this thing is sort of unwieldy, but here we go. You form a base, and now you have to ask yourself, is this thing failing? Could be, but you know, so there's a similarity there. I think, was it C-Trip? Let's go back and look at C-Trip if that did a similar thing. You got to go all the way back, all the way back. I don't know if this is one. No, this didn't do it. I'm thinking of another one. Is it VIPS? Is VIPS still around? Yeah, VIPS is still around. No, VIPS. There's another one. I'm trying to remember what it was. But in any case, yeah, forget it. What you have is this thing looks like Baidu a little bit. So, anyways, Momo maybe Momo's going to see how Momo came out of a big structure. It pulled back to the top of the structure. And another thing, here's something I'd point out. When it hit this low here and it started to form, you hit form the bottom of the base, you hit the 200-day line, and then you pull this Wyckoff and retest. Can you guys see that? where you pull, so you bounce off the 200-day line here, you bounce up, you pull back in, and volume dries up on a white copy and retest. You never quite get to the 200-day line. Then you turn off, you get a 5-day pocket pivot here, and then you get, I believe, let's see, a 10-day pocket pivot here, and now you're off to the races. Now you're back running up. So that's where you're buying it. And what helps in this case, if you look at the weekly chart at the same time, you'll notice that it's at the time that it's forming the potential lows of that base, it's coming back on top of this big structure. So that gives you some clue that this stock is potentially in a position where it could be forming the lows of the base. Remember, somebody forms the lows of the base. And back when Dr. K and I were working at William O'Neill and Company, where I was heading up the institutional advisory business, and he used to work with me as an analyst dealing with the clients, you become privy to what they look for and how they start buying stocks. So stocks get to a point where not necessarily do you find technical support, but from an institutional standpoint, you find fundamental support. In other words, the institutions look at stocks on the basis of where they think the value or the growth is, and there's a point at which the thing just becomes too cheap for them and they start buying it. And so you're looking for those signs in a variety of ways, and we have tools for that using the roundabout and bottom fishing pocket pivots and white copy and retest, undercut and rally, blah, 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 you name it. Stuff that we're going to be talking about in the upcoming mini conference, which is only about, what, 4 weeks away, Dr. K?
Yeah, that's about right.
Anyways, but you can see there's a rationale for this forming this low. So once you start to see the clues of the low, then you're all over it. Same thing. NetEase was another situation. That's having some trouble at the 300-day, not the 300-day, the $300 price level. So I'm beginning to wonder whether this thing is just a turkey and it's going to come apart. So you notice how ATVI is moving higher? So you could feel that. To tell you the honest truth, I probably should have just gone long that thing this morning when it was up 20 cents and the rest of the market's getting hacked. Same thing with this First Solar. So someone's asking, did we talk about First Solar yet? Well, we talked about it in brief, but the one thing to watch for is you're getting up to the 200-day line. So my guess is it's good for, excuse me, it's good for a trade up to the 200-day line, then you can see what it's doing. But I think the sedge is interesting here, and that's holding tight. You got a bottom fishing, big volume bottom fishing pocket pivot, and you're in a position where this thing is so down and dirty, the only way it can go up is up, right? Or the only direction it can go up is, it can move is up. So anyways, where were we? Somebody's asking again, I just asked about changes in the MDM VIX. I'm thinking about buying QQQ or T. Well, the MDM is on a buy, and it has been for a while. And the VIX has been on a sell for a while, so there's really nothing new under the sun there. Let's see, more questions. CNBC showing a story about traders now shorting Mobileye. Okay. There's a lot of short interest in it. I don't know. I'd watch this thing. So they're knocking it down. Keep an eye on this thing. This might become viable. This is one stock that I have liked, but you can see that it's getting up, up to the highs of this big cup type formation. So I don't know if that means it's going to yank in here, which would be fine with me. Then maybe we get some sort of a viable pullback here. It's a little extended. The last place to buy was along the 20-day line, but you can see here Mobileye, and this maybe is another way to think through these, but if you look here, when it's pulling down in here, it's coming down into these lows, and I'm not sure, did it undercut those lows? Let me check. So this low here is 33.69, this low here is 33.93, and this low here is 34.40. So yeah, see how it undercuts all these lows and then it turns? And I remember when I was looking at this on this day, you can see where it gapped up off the lows right here on big volume. And I remember my first instinct, and you guys, I think we put out a notice to members when we sent out the video for the webinar on that day. And I was actually during the day talking about maybe trying to short it at the 50-day line. And then after the webinar was done, I actually turned around and went long the thing at the 50-day line, just above it. And we put that out in a note to members that was within the email we send out that has the link to the video of the day's webinar. And you can go back and check that. But I remember trying to short it, and I could just feel like, I'm really wrong here. Something's, it's not giving it up, and it's very persistent. There's a strong bid here. So you start going into looking at the the weekly chart, and I could see, well, it's undercutting the lows here, and it's turned off the lows, and so now it looks like it may just move to the upside. So I go long on that basis. But I'm always looking at what is the position of the stock on the longer term chart, and does that create a context as well for a low? So if I can put the pieces together, you know, there's no formula, you know, if X, Y, and Z do Q or whatever. It's using your judgment and kind of understanding how bottoms of bases form, and that will put you in the right position, I think, at the right time. So anyways, is Shop going to make focus lists? I think it's way too extended here to put on. Why is this thing so slow coming up? Is that the right symbol?
SHOP?
There it goes. I don't know, I had to do it twice, had to wake it up. Yeah, that's extended, so why would it go on the focus list here? I mean, that should have gone on down there, but Dr. K, I think, was just pointing it out as a matter of strength here. Wix is extended too, but this stock is a little screwy, and you're better off waiting for weakness rather than chasing it. Another one, wouldn't you consider GoDaddy to be a similar one there, Dr. K?
Well, I mean, that one has a great, you know, it's the leader in its space, but the price isn't going anywhere, so it's not very interesting. You know, since it was IPO'd, it just kind of flatlined.
Well,
so it needs to.
look at. I mean, if you look at the weekly chart, you can see big supporting action along the 50-day line, and it's holding tight. In my book, this is more, you know, if it pulled down into the 10-day or the 20-day line, this is where I'd be looking to buy it rather than reacting to obvious strength. So that's what I would be trying to do here.
If you want to clip it for a little bit, I mean, you could do that on this one or a number of stocks, but in terms of like the longer term picture, I don't, it's not proving itself. And, you know, it's involved in a business that is very, yeah, you know, it's not the same kind of dynamics as something like where, you know, people can utilize the services to build websites. There's a huge wave there, whereas GoDaddy, there's no wave that's coming at us. It's just been. And I think that probably explains its slow price growth. You know, it's web, you know, you sign up for websites, you know, designate a website name, etc. But that's been a pretty consistent flow for many years. And my interest, it really lies in the waves that are coming at us in the form of, say, cybersecurity, enhanced cybersecurity, and do-it-yourself types of companies that, well, that allow people to do things themselves on the web, because so many more people are now joining that wave of commerce. With e-commerce.
Let's see. Somebody's saying they could not short WB at Schwab. Actually, you know what? Neither could I, actually. Now, Baba, keep an eye on this one here, because this one could be right at a buyable spot. Let's look at the 620. You can see that you got a signal, a buy signal here, and then you pulled in, and now you've turned, you're trying to break out. Huh. What was the low of the day? 101.31. Let's see here.
Yeah, I've noticed this one gets, of course, good support when it comes down to about the 100 level, basically the low of its gap up day.
Yeah.
There's always support at the bid, so it looks like it's just still making its way sideways until, you know, together with the market, it could certainly break out of this formation.
I'm just checking a couple of things on it. You can see how you got a buy signal on the 620. It's trying to break out, and it could head back to the highs. But notice how, you know, it breaks out, and it looks like a cup with handle breakout on a trend line, and boom, you know, they tag it immediately the next day, and the volume's only average, but they knock it down, you know, 3-4%. So if you're jumping all over it at that point, you're getting smacked on it.
Yeah, now you want to buy this. If you're going to buy it at all, you know, buy it around 100, because it, you know, it's hit 100 a number of times, and then your risk on this is less than 1%.
I'm buying a little here. We'll see what happens. Okay, where were we? SCI, someone's asking about. What about it? I mean, you get a viable gap up and it pulls into the 10-day line. So if you want to buy it, I suppose this is where you buy it, if you like it. Anyways, let's see. Someone's asking about ATVI. You must be late, Scotty. I already talked about this one. Looks like it wants to go higher to me. So, and I tried shorting it earlier this morning. I flipped to the long side, live action during the webinar here. So that tells you something. Data getting pummeled around, but you know, Splunk. I think if Splunk holds up, okay, data might be able to come out of this. So you know, this looks okay to me. I'm sorry, not with Splunk. Splunk coming out, I'd watch it too because they're sort of related. Aren't they big data stocks or something like that? Anyways, let's see. So now everybody's going to start buying BABA. Okay. CRTO, similar. Criteo, is that another big data stock? If it is, yeah, it's kind of... So it's 612,000 shares a day. I think I'd like to... These are a little thicker, I believe. This thing trades 1.7 million shares a day. Data trades 1.18, so, or 1.18. Yeah, 1.18. So I kind of like that better. Okay, let's see. See, one thing for sure, if you keep trying to short the market here, you're not going to be making any money. You'll be just getting squeezed. If you come in late, you'll be getting squeezed. My method, as I've talked about many times before, is to, if I come in short and I get a big gap down in the morning, I'll cover into that, and then and I'm using my 620 also to show me where I should be covering. Or like in a situation like NVIDIA, you know, if you're undercutting a low and you turn on the 620, then you got to cover. If you're short X, you come down to the 50-day line, you got to cover. What other ones were there? Keep an eye on Qualcomm is getting weak. I'm still short that. So whoops. And that one, I think it could bust through the 20 days. So keep an eye on that one. I actually play this on the long side too, coming up on the undercut. It undercuts the gap down low here, and then it holds tight. The volume dries up, and then you get a pocket pivot, a 5-day pocket pivot through the 10-day line. So let's see. Any other stocks? Any other names? Okay, let's go through focus list. So we got AGX getting pummeled and trying to rally back up to the 50-day line. I think in this case, this thing becomes, I think you had to sell it up at the 50-day line. So when it can hold, and we talked about this over the weekend, if it can't hold the 50-day line, just get rid of it. And so it's broken down. So I think this is kind of busted. AK Steel, another busted name. But notice how it's trying to undercut the lows here. So I don't know if that sets it up again. But it seems like all these steels and infrastructure names are all dependent on what Donald Trump says about the infrastructure plans or the wall or whatever. So I don't know. Let's see. Amazon is trying to break out, and it did actually break out, and now it's back to the top of the base. I don't know if this is going to hold here on the pullback. What's your volume level on this thing right now, Dr. K? You're running about 36% above average, so, you know, yeah. I don't know. Hard to say. Hard to say.
I'm 24% here.
BABA we looked at. Box is interesting because it violated the 10-day line, but it's trying to hold along the 20-day line. Earnings come out next week, so I'm not so sure I'd necessarily want to be trying to buy the stock ahead of earnings. This one, Chemours, is a chemical company, but it's holding the Bible gap up of last, I guess it was last week when we put it on, and you get the light volume pullback today. I think we're running, what, around 35% below average right now. So look at Qualcomm diving through 56.60 now. Here we go. That is my only short right now. So I flipped long on the ATVI. We looked at CUDA, which is holding tight. But again, you got to kind of step in and buy it at support when it looks grim. But it's just basing. And so I got to think some of these things are setting up. Facebook comes in, finds support at the 10-day line after the pocket pivot breakout on Wednesday, so that's actually acting okay. Freeport, there was news over the weekend that I guess they have a mine in Indonesia, and they're not going to be able to export the copper out of there, so they're screwed, basically. And I noticed it's moving towards these lows and undercutting and getting close probably, and it's still away from the 40-week line, but it may be getting close to a point where it could have a reaction rally. So if you're a swing trader, I'd watch for that. Your low here is 13.13, and we got as low as 13.16, and so we haven't undercut it, but you're getting pretty close. So you might want to keep an eye on that one. Fortinet, that's one I'm long here on the pullback, and it's hanging in okay. I like the way it acts on the weekly chart. It's working off some of the overhead, it looks like. So I think this has a shot at going higher if we get some sort of rotational correction. So that's kind of what we're looking for. And you got to be open to it. In this market, I don't think you're necessarily going to go into a bear trend right away. It may take some time to develop, and you can hit some shorts in the meantime and make some money. But Glauco's finding support at the 20-day moving average. Also, keep in mind that when I talk about the 20-day line, the 20-day moving averages, they're all exponential. That's the only exponential moving average I show on my charts. Otherwise, you got the 10-day, 50-day, and 200-day simples, which are magenta, blue, and 200 and red for the 200-day, in that order. So let's see. FCX, we looked at that one. Where am I? JD. Now this is acting okay, and earnings are coming up on the 28th, I believe, so that's next week. Momo is pulling into the 20-day. Earnings are coming up there pretty soon, so I'm not... You know when that is? What day are they showing on that one?
Let me check. No, this thing on this app, they always have these annoying updates. Anyway, it's March 7th.
Okay, so that's coming up. My view is, I think if you play it on the upside and we put it on down lower, just leave it alone until earnings and then see what happens. Let's see. Netflix is next. So you can see you're holding the 20-day line. And I actually tried shorting this at the 10-day line earlier. It just kind of went through, so I covered. I'm out of the way. And right now we're at 143.36. So this one's kind of funky. Now, this has a little bit of what we call the Louis formation character. And the essence of a Louis pattern is that you'll have a strong move. So in this case, you have a pocket pivot in early February, and it moves to new highs. So that's a strong move. And then all of a sudden, boom, it gives away. And it breaks down. So it essentially fails on that pocket pivot move, and it drops below even the low of the day of the pocket pivot. Okay, and then it sits there along the 20-day moving average, and this probably fakes you out and scares you when you see this break. But that is the left side of the L, and then the right side of the L is along the 20-day line. And so what happens is it forms here, and then it turns around. Now maybe it tries to break out again. Hard to say for sure, but it looks to me like it's trying to do that right now. And so that's the Louis pattern, and you'll see it from time to time in certain names. I'm trying to come up with some examples. I think if you go back, now you can see here you tried to form Louis, but they failed. So you've got to definitely use a tight stop somewhere along here if you try and mess with them. But I'm trying to remember, maybe this is a big Louis, but just as sort of a quick breakdown. And I'm just trying to remember what were the old examples, prior examples I had of these, and I can't remember. Anyways, okay, continuing on down the list. Where are we? Talked about NVIDIA, QTNA, Quantena, I like that name. That looks like it might be in a Bible spot on the pullback to the 20-day moving average. Volume is 60% below average, so it's pretty light. So yes, that thing is trying to find support here, and nobody's selling it. So that might be a spot to move in. This thing is so razor thin, 230,000 shares a day. It's kind of ridiculous. But for anybody, if you got a small account, there's one for you. Now here's Square on a Bible gap up. You could have bought it yesterday morning. We put a report out on it just above 1650, where it opened up and hung around there for a little while before moving higher. It's been all over the place, probably in, what is it, like a 10% range over the last prior day. And today you're holding on an inside day, and you're pushing to all-time highs. So this one looks pretty good. And I'm wondering if it's not positive for something like a Twilio. You know, some of these just these little cloud names. And of course, this is one that's just been beaten to hell, and it's kind of sputtering around here. And I believe the volume is running pretty light, minus 59% below average. You're 31.79. You're off the lows at 31.01. So that's trying to hang in there. That might have a shot at turning. So I wouldn't give up on it just yet. This is, this is also another area where you could see some rotation. Viva, they came out with earnings when? In the next couple of weeks or something. So that looks like it probably wants to go higher, but I think you have to wait till earnings come out because I'm not going to play earnings roulette. X is probably coming off the list.
February 28th, so they're coming out Tuesday.
Okay. Now let's see. We've got here's X. Now, does X become viable here? That's the other thing to think about. It's failing on the breakout. Okay, so you know that it's dropped below the 20-day, but now it's back above. And then on top of that, we went and threw out a bunch of reports on these as short sale targets, but you need confirmation first. So they're basically to kind of watch out for some of these, not to act on them. I know some people will mindlessly start placing a trade if we put a report out on something without thinking about what we're talking about. In most cases here, you have these initial failures. So you have one here, you have one in CAT, and you definitely would not be shorting on the break necessarily. You want to short them up close to the 20-day line or the prior breakout point because they'll tend to bounce back up in there and then roll over if they roll over. There's no guarantee that they will. They could just bounce and turn around and re-break out, and we already saw CAT do that once before, and we've seen X do that. So here's, CAT broke out here and fails, undercuts the lows of this base, and we go back to the upside. That's kind of a Louis pattern, I guess. But you see how this occurs after a strong breakout, and then it just looks like garbage, like it's going to die, and boom, right back to the highs. And of course, if you're a dummy who buys breakouts, boom, they knock you right out, and now maybe you could be looking at buying this. What do you think of that? So maybe X does a similar thing, but X has already has its own history of looking ugly. When it broke down back here at the end of January, I think that was, or was that February 1st? Yeah, February 1st, and then the very next day it just turns right around. Boom. Somebody's asking, does CLF have Louis potential? I don't know. How am I supposed to be able to predict this? All I can tell you is that you got a nice viable gap up move, and it runs up, what, 20% in 2 or 3 days? And if you own it and you didn't take that profit, well, I think you're kind of silly for not, okay, I'll just say it. I think you're a moron for not taking the profit, and then you could think about buying back. But, now it's back into the 20-day line. Maybe it finds support here and hang. So I guess you just watch to see. You don't, this isn't something you can predict ahead of time. See, everybody always wants to take a chart pattern, and they want to turn it into some sort of a canned approach. It's like, oh, if you can slap a label on this and call it a Louis, then you buy it. But you don't know yet. You have to wait and see if it forms the bottom part of the L, which it may or it may not. It may just go tight sideways, the volume dries up, then maybe you could buy it, or it just bounces off the 20-day line and turns around and goes higher. You have no idea of knowing ahead of time. So, there's most of these patterns I use, these names I use just to describe phenomena that I observe. They're not like labels or patterns that you just slap a label on a pattern, or you try to, like this is a cup with handle, this is a double bottom, and you just buy it on that basis without thinking about what you're doing. And in the 80s and 90s, I guess that was the way you could trade the market, but I don't think it's like that anymore. So you have to be a lot shrewder, or you have to be able to pick the right stocks and then sit through a lot of garbage, because this is a pretty good size move. What is that, like 25% or 20% off the peak there, Dr. K? What is that?
Yeah, I mean, you can either trade it longer term using the 7-week rule, but the problem with this market environment, which has been persistently frustrating over the last many years, is that you have very few NVIDIAs out there. It's not like the 90s or the 80s. There's tons of these great names, and you could afford. I mean, look at my type of portfolio distribution. I was able to do triple digits year after year, typically holding between 8 to 16 positions, just because there were so many good names. Now, I mean, since 2009, really, and I would argue actually since 2000, and I think the real last year was 2003. That was a great year. A big part of that year was, a very fat part of profitability, and we haven't had a year like that since. And certainly since the QE environment, just a number of proper names have really dried up. So, you know, I mean, I know there's some longer-term people out there, and that is okay still. I mean, if you want to, as long as you're buying with very little risk, so maybe when the stock's down by the 50-day, you're buying that, and then you use the 7-week rule to hold onto your position, hopefully for a number of weeks. There's nothing wrong with that. I mean, and you can, you know, if you hit an NVIDIA, it makes all the difference in your portfolio. And if you don't, you can still manage your risk very well. You don't have to be a day trader or a swing trader to make some sort of progress in this kind of environment. So just, you know yourself. Know thyself is the two most important words in investing. So if you're not a shorter term type of trader, don't force yourself into that. I mean, maybe you can make progress by risking a little bit of money and getting acclimated to a shorter time frame. But if it's not meant for your trading personality, then just understand how you function in an optimal way, you know, whatever that is, because we all have different time frames and we all have different risk tolerance profiles.
Somebody's asking if Netflix is still buyable. Well, why do you need to ask us this? Unless you're a newbie and you don't really understand too much, so hopefully that is the case. But let's think about this. How far are you away from the 20-day moving average? Dr. K, can you answer that question real quickly?
Well, from the 20-day, you know, in a percentage basis, you know, a couple percent, if that. Not very much.
Okay. So what could you do? You're asking, is it buyable? I mean, what does that question imply? Are you implying like if I buy it here, is it going to go up? Is that guaranteed? No, it could go down. But all you know for sure here is it's holding tight along the 20-day line. Your volume, I believe, is drying up. Is it not, Dr. K?
Minus 44%.
Yeah. So it's drying up here. So it seems to me like it might want to move higher. So.
Yeah, so you could keep your stop real tight. If it breaks through the 20, that could be your stop. So then, you know, you're risking a couple percent on the trade. If you want to be a little more liberal, I suppose you could use the low of the pattern, but then, you know, then you're risking out to what is that? More like 4 or 5%.
Right.
Again, that might be permissible with what, you know, your style, but that's a question every investor has to answer for themselves.
Yeah, I think I'm actually long that here. So, you know, my view was if it didn't break the 20-day line, it goes back above the 10-day, I just flip and go long. And so it's been, you could see that you had a turn here off the lows on the 620, and it's just continuing to go higher. It might break out. I mean, that's what it looks like it wants to do. So I go long here. My stop is a 20-day line. It's pretty simple. And what's your risk? 2%. So that's basically how you think about trades. You know, you don't ask somebody else if something is buyable and then they say, oh, yes, it's buyable, and then you buy it because they say it is. You need to be able to figure out what the trade is. What is a trade? Well, the trade is pretty simple. You're 2% above the 20-day line. You buy it here, and guess what? You actually have two options here because it's trading just above the 10-day line, which is at 142.80. So that could be your really, you know, anal retentive tight stop right there. Or you could use the 141.40 20-day moving average. So that's the trade. Whether it goes higher or not, who the hell knows? You know, all you know is that there's a trade. The stock seems to be acting okay and trying to set up in a base here and break out. Maybe this move, you know, a couple of weeks ago was too premature in early February. So, you know, maybe it needed more time, and that's what this is about. You shake out some sellers, you set it up, and it moves higher. So, bada bing, bada boom, you know, maybe that's what happens. So, you know, that's basically what it boils down to. Not asking somebody else if something is buyable here. It's about trying to understand the parameters of the trade, where your risk lies, and whether you can buy on the basis of constructive action with a tight stop. So in this case, yes, it definitely allows you to do that. Now, in a case like a Wix, for example, whoops, WeWix. Is this going to do this? Yeah, you know, that's a bit extended, so you'd want to see a pullback to the 10-day line. So that's a different situation, you know. Anyways, market's just flopping around, but it's interesting it's not coming apart. I think I'm going to buy some Twilio right here. It's kind of hanging up. You got the buy signal, 620 buy a while ago. I should have been on this earlier, but it's holding above the 20 line. So in this case, all right. So you could ask the question, is Twilio buyable, which you would get slapped around in the same manner. But if you think about this in terms of a trade, and this is how I'm looking at it, is that the 20-day line sits at 31.66. You've come down for several days. What's your volume level on this again, Dr. K? Minus,
We're at
minus 59. So you've got a voodoo pullback here. So on that basis, you could act on it and buy it here, and you could use the 10-day, or I'm sorry, the 20-day line at 31.66 as your tight selling guide. If you wanted to give it a little more room, you give it to the 50-day. But in my view, if you're drying up this much, and to me this looks like right now probably going to be the lowest day, because we're more than halfway through the day, and it's not even half of yesterday's bar on the volume. So I think that if it's going to move out of here, it's going to do it soon. So I would use either the low of today at 31.01 or the 20-day line, maybe the opening price, which was 31.28 as your stop. And I think that's reasonable risk. What is that, like 2% lower? So what do we used to call it, Dr. K? Milk fat. Yeah, that's it.
Right.
Anyways, Z was on the focus list and appears to be in a low-risk viable position. Possibly. And this could be one of these names that fakes you up, but I've never really liked this thing just because it's so volatile. But it does seem like if you're going to buy it, you got to buy it on the pullbacks and not necessarily on the on strength. So in this case, there's a pretty clear trade here. If you think, what's the volume like? Well, it's only minus 10% below average, so it's not really drying up. However, you have the 34.81 200-day moving average at 34.81. So that would be your stop, or that would be your selling guide. Maybe you could use this low from the other day at 34.75, or a little bit lower just to give it a little bit more porosity, given that that's not even 1% lower. So you could maybe give it 2 or 3% if you wanted to. It really depends on how you want to handle the trade. The way I would handle it is that I would... that was my daughter texting me. She wants to know if I have a Hawaiian shirt. I probably have too many of them that maybe I can offload one on her. She probably wants to tear it up for a school project. In any case, that would be your trade. So I guess you could take a shot at it. So I personally like the Twilio better. I like the Sedge. I like Netflix Bob. The things I actually bought. I like the Splunk. Did you put out a report pulling back that last one on Splunk? That may actually be long.
Yeah.
Okay,
I did
good.
an update on
All right.
because just remind everyone to remain fluid.
Whoops. DG, just a couple of more questions before we get off. But hopefully we kept you on track this morning, thinking about the long side, because some things seem to be working. DG, what do you need me to tell you? Can you be more specific? There's really nothing going on. I mean, you found support at the 20-day line. This is these are discount retailers. They all look like garbage. So I don't know. This one right at the 200. I really couldn't tell you. I don't really see any big volume off the lows on the weekly chart. A lot of times when these things turn off the lows, they're going to have a big volume week. So example, off the lows here on Mobileye, you see the big volume week down there. That would have been 1, 2, 3, 4, 5, 6, 7, 8 weeks ago. So you can see that there's more of a basis there, whereas I don't think there's much of a basis for this Dollar General. What are the other, there's a bunch of other ones in this group. Whatever happened to NDN? They got bought out, didn't they?
I think so.
Let's see. What are the others? Somebody help me out. IG, all right, we got somebody who knows our symbols. IG?
DLTR is another one.
Dollar Tree, yeah. They just pointed that one out. Ollie.
5.
Ollie probably looks better, but it's still a squirrely little thin stock. Trades 587,000 shares a day. Not bad. This is amazing. I'm now 200% long. I came in today, I don't know. Well, yesterday I think got up to like 160, 180% short. And I completely flipped the other way. And then I have to laugh because that's so typical of this market. And also I think it's typical of my methods and the fact that I have no bias. I'm not bullish or bearish. I'm just show me the setups. If I try a trade one way and the information I'm getting, for example, trying to short ATVI earlier today, or even Netflix, or even Splunk, and I can feel that no, this thing is not a short, it's a long, and I just flip to the long side. I'm sure most people can't do that. And I'd have to say that not until very recently, within the last 4 years, have I been able to do that. But I think that's really how Jesse Livermore traded, much more that way. He was not there to argue with the market. He was just there to figure it out, you know. And I go back and, you know, I can see sometimes in the past I would write about the market in sort of in an obnoxious style and just kind of realize how stupid that all was. See, now I'm insulting myself. But just to have like an ego position, you know, and oh, the market's up today and all those dumb buyers, probably all retail money, you know, blah, blah, blah. That's just bullshit. It's all about figuring out what the market's actually doing, and it has nothing to do with and I would say if you find yourself in a position where you're getting angry at the market for what it's doing, you're probably on the wrong side, and you should use that information to get on the right side. But I notice a lot of people will, you know, if the market's getting whacked and they could be making money short, they'll be trying to talk about how people are scared and jumping off of buildings and blah, blah, blah. And to me, that's all just ego talking, and I have no need for it anymore. Right, Dr.
Well, and the mind is tricky because it can convince someone, well, the ego can convince someone easily that they're right, you know, that you can concoct all kinds of bullish or bearish arguments as you see fit. And that's a big challenge, I think, to all of us, not to get wedded to either side. Just let the data tell you what you need to do.
Exactly. Somebody says, Gil, can't you just take a short question? Is it viable as an opportunity to talk about it? Your condescending attitude is so off-putting. Hey, what can I say? I am what I am. You know, if it bothers you, then just shut your eyes, or close your, turn off your sound or something. I don't know. But you know what? I am who I am. And when I get that sort of a question, someone asking me if something is viable, I would think that, especially if you've been around as long as you have, then you should be able to figure out what the setup looks like. So I don't really understand. I actually get short with people when I think they have a fair amount of experience, but yet they're asking me a question that almost seems to answer itself. And Bill O'Neill used to do that. If you think I'm condescending and off-putting, you should have worked for Bill O'Neill. So, I mean, he used to send a lot of people packing because they couldn't handle him. So, no, I'm not saying I'm Bill O'Neill, but I can be as obnoxious or more so than he is. But you just have to, you know, love me or leave me. That's what I say. In any case, and you're welcome for the info. But anyways, you know, let's just take it for what it is. It's just banter. It's traders banter. You know, don't get too excited, Shane. It's not. We're all on the same team here, I think. Let's see. Someone's asking a question. Here, I can get obnoxious here. Watch this. Ready? What?
They call it tough love. You know, a lot of people who follow us kind of refer to you
tough love,
good cop, but ultimately we're all on the same side at the end of the day. And you have a different teaching method, but I think it can work very well because some people definitely need to be kicked a little bit to get their head out of you know, where it's stuck. A lot of people do get stuck in a pattern, especially if their ego is involved in defending that position. They will defend it to the point of rupturing their own accounts. I mean, what is it? I think it was Livermore who said the ego is the most expensive part of a trader. You know, because it ultimately will cause money to be lost in the long run. So you know, we can cling to our beliefs even in the face of evidence. So sometimes it does take a bad cop, so to speak, to correct someone's perception.
I'm just compensating for all the times that Bill O'Neill used to slap us around. Anyways, last question. When you set a 20-day stop, do you normally sell when it hits the stop during the door, or do you wait and see if it closes below the 20-day? I actually wait for the moon to move into the 7th house and then for Jupiter and Mars to align. And if the stock breaks the 20-day, at that time I will sell it. You know what? I might use a 20-day line. I might give it a little room. It really depends on what's going on with the market, on what I'm seeing in terms of the stock trading. So a lot of it is judgment based on the way the stock is acting and the way the market's acting. So if the market starts selling off and I got a stock that's hitting the 20-day and that's my stop, then the fact that the market's selling off might push me out faster. If the market's turning and rallying, then I might give it a little bit of room, maybe 1%, to see if it can turn. But a lot of this is contextual. There's no hard and fast rules, and I know that people like to have simple formulas and recipes. You know, they can keep in their little recipe box whenever they want to make something. So, you know, that's basically what I would say there. Somebody says, do you have any info on the 620 intraday charts in the facts? Do we in the FAQs?
Yeah, we do. We just some basic stuff. I mean, if you type in 620 into the search bar, you'll pull up a couple things. Just the general point of what the 620 is.
Okay, yeah, so you can check. Somebody's saying somebody is saying that my obnoxiousness isn't off-putting, it is healthy. I think it is good to keep my ego in my back pocket. Yeah, so somebody likes me to be obnoxious. So does that mean I should be more obnoxious? I don't know. Anyways, and the same person again says, no, different person. The first person says, thanks again. I probably should stay away from individual stocks and just work ETFs based on the MDM, maybe. Well, don't sell yourself short, Shane. I'd say you can do whatever you set your mind to. And I think we've known you long enough to know that you're sharp enough to figure it out. So, you know, don't sell yourself short. You moron, how's that? So I mix up a little bit of love with a little bit of obnoxiousness there. Okay, anyways. So that's all we've got. So you know where I stand here. I went from short to long. Maybe, you know, we still got 3 hours left. Maybe I'll be going back to short by the close. I have no idea. Market's down 47 points on the Dow, NASDAQ down 11. What are our volume levels looking like, Dr. K? And volume is lighter. So for all you know, this is just a needed pullback. Yeah, that makes sense. You know, but they sure make it look ugly, and everybody wants to jump all over it as the beginning of the Trump sell-off, it's the end of the world because there's no tax cut and this and that. I don't know. But, you know, just watch the stocks, and I think what you're seeing here is something of a rotation out of certain names and possibly into new areas, and I think that's what you want to be watching for here. You don't want to get too carried away with just getting bearish and shorting everything in sight. So anyways, on that note, can you give us an outline of the topics for the traders dinner? No, we'll send that out to the attendees beforehand. But it's basically going to cover new stuff in all our different methods and even newer stuff and magical stuff and maybe some obnoxious humor from me, and hopefully I'll get to slap someone around in real time, and then maybe we'll have a boxing match. I don't know, we'll see. But I guarantee you it'll be fun. Anyways, someone says, oh, getting back, Shane, you say you have you're hard-headed and thin skin. I'm just hard-headed. My skin has gotten a lot thicker over the years, so now I'm just kind of hard-headed, and I try to keep my big ego in check, but it's not always hard. Sometimes it breaks out of its cage and starts running amok. In any case, you guys, I hope you got something good out of this webinar today. And we'll just see where this whole market heads to by the close. So hang in there, and we'll catch you next week. Thanks for showing up.
So long, everyone.